Okay, good morning, everyone, and welcome to what is now the 50th edition of the Coffee Microcaps morning meeting. You're all very welcome to our regular attendees and anybody joining us for the first time. My name is Mark Tobin. I'm the founder of Coffee Microcaps, and we're just going to run through a couple of housekeeping slides, and then we're going to get straight into it with our first presenter this morning. I'd like to make a special mention of our sponsor of the Coffee Microcaps morning meeting, Meriwether Capital. You can get in touch with Luke, the founder and portfolio manager, about his new fund, which he's kicking off, I believe, still on the 1st of November. The PDS is out and available. So be in touch with Luke if you're interested in looking at a new microcap fund in the Australian market. Just quick compliance and disclaimer. If you're joining us for the first time, what kind of companies do we normally have presenting on here? Generally every Thursday. They got to be under a market cap of 300 million in revenue and approaching cash flow break even, or indeed are already profitable. We don't have companies from the resources or the biotech sectors as a kind of a rule. So it's what I call industrial microcaps. So that's microcap technology names, microcap financial services, microcap healthcare, anything basically outside of resources and biotech. And this morning's webinar is going to be over the next hour. We've got two companies presenting, each getting 30 minutes, which we're going to roughly break down into a 20-minute preso and 10 minutes of Q&A. If you do have any questions for our presenters, please type them in the Q&A box rather than the chat function. It just makes it easier for me to moderate to our panelists. The webinar is being recorded. Please note that, and it will be posted on the Coffee Microcaps YouTube channel tomorrow morning. You can follow Coffee Microcaps. We're on Twitter, YouTube, LinkedIn, and I also write a weekly paid subscription newsletter where I profile one interesting microcap stock every week, and you can grab that on the Substack newsletter platform. First up, we're going to hear from, I'm actually delighted to welcome back Rob Edgley, Chairman of Selfwealth. And then after that, we're also going to be welcoming back Mr. Saul Lukatsky, the MD of Spirit Technology Solutions. So I am going to stop sharing my screen, and I am quickly just going to get up Rob's presentation for him. Rob, I've got the presentation up now. You're ready to go on your side?
Yeah, it's just it hasn't come up just yet.
Okay. Can you see it now?
Not yet.
I've got the cover slide. I can see it on my side. I've just skipped to the disclaimer slide. Not sure. Can you see it on your side, Rob? I'm on the disclaimer slide 2 at the minute.
Everyone else seeing it as already? That's fine. You can.
I can't see it, Rob. No, and Mark.
You can't.
No, I cannot. No.
Yeah, no, I can't either. Yeah, so it's.
Let me just stop sharing for a second, and I will just try this again. Let me see here. Just bear with me 1 second.
No problem.
Try something else here quickly. Rob, Katie, can you see the cover slide now?
No, I can't see it.
No.
So strange. No.
I'm happy to
Oh, there it is. There it is, Mark. Yep, we got it.
Okay.
Now we're right.
Okay, and get the disclaimer slide.
So let's start on that slide. So welcome everybody. I know that I've presented on Coffee Microcaps a couple of times previously. I'm sure that the viewers are well aware of our business. So I'm going to focus today much more on our recent quarterly results, which were released last week, first quarter of FY22. But I want to just start with, that's a very big statement in front of you there, empowering people to achieve financial freedom. That really is what Selfwealth is about. And Selfwealth is now moving very quickly from what we traditionally were a low-cost transactional equities broker, online equities broker, to something much more. And we're now firmly on the way to being a low-cost, high-value wealth creation platform. So you'll see increasingly the addition of more and more diversified asset types on the platform. And we'll talk a bit about those today as well. This, together with the strong engagement with our clients, numbering over 107,000 active traders, and the innovative culture at Selfwealth, will drive our clients to spend more and more time in our ecosystem, where they will be empowered to grow their wealth and achieve financial freedom. So if you go to the next slide, Mark.
Yeah, will do. There you go.
Okay, we're going to spend a fair bit of time on this slide because there's some significant highlights that were all released with our quarterly activities report and Appendix 4C on the ASX last week. Selfwealth is once again experiencing accelerating growth, double-digit growth on all key KPIs during the quarter. Our active traders were up 13% to 107,461. That was at the end of September, and we continue to power ahead with more and more active traders. The very important point here is, what is an active trader? And this is where in the marketplace people are misled sometimes in terms of what is a client. We take a very strict definition of what a client is, an active trader. And that active trader means that the client must have gone all the way through our AML procedures, opened an account, have an ANZ bank account with Selfwealth, and they must have transferred cash into that bank account, or they must have switched stock onto the platform, so transferred their HIN or transferred stock. So they have stock ready to sell or cash ready to buy. If they have cash in the platform, we're already earning off them with a net interest margin. So up 13% to 107,461, those active traders. Quarterly trade volume was up a very strong 22% quarter on quarter to over 435,000. And our client cash for the first time ever hit a record of 600 million on the 30th of September. So that cash is, as I mentioned, we do earn a net interest margin on that, but that is basically it allows you to see the capacity we have on our system, the capacity for people to invest when the stocks they're looking at hit the right levels. Certainly in the latter half of September, we saw some volatility. The market came back a little bit and we saw some of that cash being put to work, but it's a number that continues to grow. Also, something that we're very proud of this quarter is our increased engagement through content. About 8 weeks ago now, we launched something called Selfwealth Live on a Monday lunchtime. And it's a session that a very knowledgeable gentleman runs, Owen Raskovitz, he runs that on the platform so that our clients, our customers can engage with us. They can learn about different themes, different stocks, and it's really a Q&A section. They get to ask questions about anything related to the stock market. We're having, on average, 2,500 people log into that webinar every Monday now, and it's producing obviously lots of ideas for people to take away and use in their trading strategies. In July this year, Selfwealth raised just under $12 million of capital with a very clear picture that it was going to invest in growth. And that strategy was laid out on the ASX, and we had a very clear product roadmap that we were going to adhere to it. Most of that investment went into in particular to development of new products, our IT and data strategy, and also an increase in our marketing spend. And all of those things have allowed us to execute perfectly on that strategy in the first quarter of this financial year. We were able to roll out 3 major new functionalities on the platform. And in my 3 years at Selfwealth, I've never seen that in one quarter. So it's a testament to the investment that we've made in our business recently. Certainly it's very, very pleasing to see new products racing towards completion and new functionality hitting the platform on a consistent basis. Instant deposits is a very big one for us. No longer do people have to wait overnight for a BPay to clear in their Selfwealth account the next day. If you see a stock that hits your target range, has an event on a particular day, you can transfer money now instantaneously from your bank account into your Selfwealth account. A couple of seconds of money's in there. That's led to an increase in trading. Obviously, those trades that people want to do without the cash in their account, 24 hours passes and the trade passes as well, and that trade never gets done. Whereas now the deposit is instantaneous and the trade gets done. We also then go straight through to live pricing, which has been made free for all clients on the platform. And we've also just recently released ESG data on the platform, all ASX 300 stocks and around about 3,000 US stocks as well for the US part of our business. And that's a very popular measure that people are looking at before they make their investments. We're very pleased to win 2 awards, including the preeminent award for the Finder Investment Awards in 2021 as the best Australian share trading account. And also we won the best share trading platform for long-term investors. This is good because it's not paid awards. There's plenty of them, but this is based purely on client feedback. So we're very proud to have won those awards. We have also expanded our market share once again. And during the quarter, the independent research from Investment Trends had Selfwealth as the number 4 in the market for primary online broking relationships. And that means we've dislodged one of the big 4 banks from what's pretty much been their territory for many, many years. Future innovation, that's what we're all about, and that's what the capital raise was also about. And we'll see cryptocurrency getting to the beta testing stage in December this year. We're getting closer and closer. We're really thrilled with how this is coming along. There will be announcements coming up as to our offering in crypto. It'll be done the Selfwealth way. It'll be responsible, and it will allow clients, very importantly, to have their Australian equities, their US equities, and their cryptocurrency coins in the one platform on the one screen at the one time. And that, I believe, will be a first for Australian retail online broking. There'll also be a new international market launch this quarter. Stay tuned for more news on that. We're keeping that a little bit secret at the moment, but it'll open up new new channels for us to continue to increase the number of active traders on our platform. So we'll jump to the next slide. Here we are. We've got a small typo there on the operating revenue. The Q1 FY22 is actually 5.5 million. So it was up. It was actually up around about 8% quarter on quarter. However, in Q4 FY21, the 5.1 million there, that did include 400,000 of annual subscription revenue, which hits us once a year when we do a big promotion at the end of the financial year. So on a like-for-like basis, we saw very strong growth in trading revenue, more like around 15% growth in revenue. We've seen that the key measure is, the key word there is accelerating growth across all of our key financial metrics. The significant increase in trading revenue I mentioned. 31% of total active traders have now added US trading functionality to their portfolio, and we're doing our best now to increase our content and our engagement with those traders to get them to dabble into put their toes into the US market. The month of September was really a couple of weeks of volatility. So the good thing about our figures during the quarter were that they increased. July increased on June, August increased on July, September increased on August, and the volatility at the back end of September did certainly help us have the second highest monthly trade numbers ever after February earlier this year, which was the whole meme stock phenomenon, which was the high water benchmark for the high water mark in our industry across whatever you're looking at, ASX trading, US trading, anything. So a great month to finish the quarter off in September. We'll move to the next slide. Okay, there's a significant opportunity, and those who've heard me talk before will know what that opportunity is. The banks still have approximately 70% of that market share in online broking. That is a diminishing 70%. It's down from 85% a couple of years ago, and it continues to fall. In that time, the addressable market has at least doubled up to 1.4 million. And people will also realize that in this day and age, it's not unusual for clients to operate on a number of platforms for certain things about certain platforms. So the amount of online accounts is a number way north of that 1.4 million. Our objective is to convince those bank clients to switch to Selfwealth, and we certainly have been known as the #1 switching online broker. So we see the HIN transfers coming in day by day, and in the September quarter we had a particularly strong quarter for HIN transfers into our system. So that tells you people, not only new first timers, new investors, but also people, seasoned investors who continue to make the switch to Selfwealth. The favorable macroeconomic trends just continue. Property prices make it difficult for young people to enter the property market. They need to amass wealth first. They need to invest first, and that's when they come to Selfwealth. Financial advisors are leaving the industry in droves. Investors these days are not likely to ring the self-directed investors are not likely to ring up an advisor and pay percentage fees away to them. Investors are looking to self-educate, and that's what we're all about, empowering our investors to grow their wealth through the educational content on our platform. And interest rate savings products, for the last 2 years, these have been irrelevant with ultra low interest rates. So no more term deposits to save for the deposit on your house. You've got to get into the market to invest, and that's where we're seeing this huge growth. So next one, Mark, I'll race through these last couple of slides to leave a bit of time for question and answers. So we have that slide shows you the investment trends data, which sees Selfwealth at #4. And you can see from that chart around the 6% of primary relationships. Now, when you include secondary relationships, people that also use Selfwealth as their secondary platform, in terms of the total online broker market, we're reaching about 8% market share. And that's up from sort of 2 to 4 to 6 to 8 over the last couple of years. I mentioned the addressable market has doubled. We are the top platform for attracting switchers. We're ranked #1 as a value platform and #1 for word of mouth referrals. And we have a very high retention rate of existing members, despite there being certainly more competition in the market these days. And there's a snapshot of ranking of websites through the Alexa ratings on the bottom right-hand corner there, and you can see Selfwealth already ahead of some of the large banks, and amongst our competitors, really only second to ComSec, and we're #4 now, but we are certainly gunning for that #2 position, and we believe we'll be able to get there. So next slide, thanks. How are we going to do that? And it's by by these 4 areas. It's listening to our client. We've done an enormous amount of work on client segmentation in the last 6 months, and we are definitely going to expand our channels to capture those big 4 platform users, to work with super administrators, to have make sure those younger traders who want their HIN, their holder identification number, which is so important in our industry, and which Selfwealth delivers. Cryptocurrency is going to be the first cab off the rank in terms of new products. There will be another international market. There's a lot more coming next year. We talk of IPO, access to IPOs and capital raise. We talk of options. We talk of more international markets. We're looking at into all sorts of things, and so 2022 is going to be certainly, in my mind, the year of additional products, and really make us true to our word as a wealth generation platform. We need to give best-in-class experience, and also the data. We have 7 years of trading data. We need to utilize that much better and make that data available to our clients to help them get ahead in their wealth creation journey. Next slide, which is the last one. And I will just finish off to say that we've been around 10 years, been listed on the stock exchange since 2017. We're an innovative and agile culture. We're the first flat fee broker in the business, and we have a trusted offering which has strong industry partnerships. Our technology is scalable. It is reliable. We've been very, very much at the forefront in terms of reliability. I don't think there'd be another platform in all of Australia that has had less downtime or less issues than the Selfwealth platform. And we've got a growing and engaged customer base and very high rates of new product adoption. When we turned on US trading, we were expecting about 10% of people to want to be involved, and now we're up to 31%. So it's a very high adoption rate. We look forward to that being the case with our crypto offering as well. Okay, Mark, I'm happy to take questions.
Yeah, we've got one already in, Rob. Let me just get it up here. Does the Selfwealth data feed directly into accounting packages? So if you want to get your data into Xero or MYOB, is that part of the functionality? Yeah,
many of our clients use a company called ShareSite, and you can download your Selfwealth portfolio into ShareSite. That's the key one at the moment. We are in that product roadmap that I spoke to previously. One of the things that was mentioned in our presentation to the ASX, and as we went around to raise capital, was that tax reporting is going to be very key for us. So that's going to be expanded. Our own offering is going to be expanded out next year, and those links that you talk about will follow on from that.
Okay, great. Then maybe a question from me while we're waiting for another one from the audience. You talk about transfers in and new active trading trader signups. How big is the transfer in portion? Is it significant? People moving their whole ComSec account or E-Trade account over to Selfwealth, or is it primarily people opening up a Selfwealth account that might be a secondary account, or their very first ever account, maybe?
Yeah, good question, Mark. Look, it's obviously when the addressable market for online broking accounts has doubled in the last couple of years. There's a majority of new investors, and Selfwealth, through its digital marketing, is very good in attracting those. Our word of mouth referrals is also industry leading numbers. So without doubt, there's a lot of new entrants. However, that addressable market, we expect that to continue to grow, but the rate of growth has to slow down at some point. Thus, our focus and our commitment, in a sense, to stealing the bank online platforms clients. They've not changed their price ever, pretty much. And we have people transferring in from them on a daily basis, and the numbers are hundreds and hundreds each month. Our new active traders run at about 1,000 a week. We generate about 1,000 a week. So there's a few hundred of those every week that come via HIN transfers. And people, they love the low cost environment at Selfwealth as well. So if you're transferring, if you want to do your trades, many clients open a Selfwealth account, and they might want to use some of the functionality on, for example, a ComSec. Our mission in life is to get them to be able to turn off that ComSec machine, so that they can spend their whole time in our ecosystem. And that's why we believe adding diversifying our product range, at least offering everything the banks do offer, and then offering more things like cryptocurrencies that I guess the banks are very unlikely to want to offer. That's what makes the difference, and that's why we think that the HIN transfers, which had one of the strongest quarters ever last quarter, we think that's going to be stronger and stronger going forward.
Another question from the audience, Rob. Have you looked to improve your supply costs with open markets again, given they've lost out on a few customers? Don't know if you can talk to that directly, but maybe improving supply costs as you gain more and more scale, and you can get kind of volume based discounts.
That's right. You're right. Our existing agreement with open markets is a scaled agreement. So the more trades we do, the less we pay. So we're as we grow, and the amount of trades last quarter, we hit an extra band that made the cost even lower again. So that's always front and center, not just open markets, but ANZ with our bank accounts, Lab Group with our onboarding. Our main suppliers, are always engaged with them to work out ways to drive our costs lower. And we've seen very good increase in our GP margins over the last couple of years by doing that. And our CEO, Kath Whitaker, is absolutely under directions from the board to continue with a focus on that, on the bottom line, which comes through the cost of goods sold.
And then maybe a final one from me. I'll just squeeze it in here since we've got 2 minutes left. What reaction are you seeing from the big banks, if any? You said they haven't really changed their price. Have you found them to be massively upping their marketing spend, or are they just kind of burying their head in the sand to the Selfwealth and other kind of dynamic competitors in the market?
Sure. Well, we certainly ComSec is the gorilla in the market with around 46% market share, and we respect ComSec for what they do, and there's no doubt we are looking to challenge them. They, I would say, are investing as we are. As a general observation, with regard to the other three banks, I don't think that they are doing a lot of investment. If you look at the bigger helicopter view, Mark, wealth management is an area that the banks are exiting. They are exiting. We've seen ANZ sell their online broking to CMC, who they've had who've essentially been running their platform for the last 3 years anyway. So the ANZ is out of the market. We'll see what happens with the other banks over the next few years, but my opinion is that directors of the banks, on the board of the big four banks, are very much focused on their core banking businesses, and they're it's well publicised that they're in a mode of divesting their wealth management assets, and I think that will continue. That presents a huge opportunity for Selfwealth. We need to be ready to offer our proposition to those clients to make sure that they come across and operate in our ecosystem.
Okay, great, Rob. We are timing that to perfection. I think we'll leave it there. Thank you very much for coming in and joining us once again. And yeah, we'll keep an eye out for all those product announcements over the next couple of months.
Yes, keep your eyes posted.
I'm gonna stop sharing my screen now because I do know we have our second presenter waiting in the wings. Sol, if you want to start sharing your screen.
Good morning, Mark. Good morning, everybody. Hope you can see that.
Yeah, I can see the cover slide now. Sol, you're good to go.
Okay, just you're doing the slides down, Mark?
No, you should be able to do it. I'm hoping.
Yep, my mouse is on. Thank you. All right, good morning, everybody, and welcome, and thank you, Mark, for the invitation this morning. Just in terms of context, this will be mostly around the full year results. We will present to the market over the next week and a half our quarterly, so just to provide everybody with context. In terms of Spirit Technology Solutions, who are we, for those investors who haven't heard of us before, or existing investors in terms of an update? We started our life really as a small internet service provider, listing on the stock exchange in 2016. So if you took kind of an 18-month view or a 2-year view, we really only had one product, which was a high-speed internet product within the organisation, predominantly supplied through our Sky Speed network, which is a fixed wireless network. Today, we are a one-stop shop for small, medium-sized businesses, all the way to corporate, to schools, across the entire product stack and technology stack. So if you think about what we're trying to do, we're really offering a service which is the merger of IT and telco into one proposition for businesses and schools. Probably 2 years ago, I had to explain that IT and telco were merging into one industry. And today, it's a little bit simpler for me to explain to everybody on the call. If you don't believe me that the two industries are merging, well, you're probably currently not on the same Zoom call, because here we are. In terms of what we do, we provide the internet to allow all of us to access these services, all the applications, the hardware. So we cover that whole band of services that businesses need. That's really what Spirit is about in terms of its offering and how it's growing that. In terms of the services, the products and the distribution, in terms of how we do it, there's 5 key product bands. High-speed internet, which is the legacy product that we always had. Think of it as almost the on-ramp for businesses to be able to have all their cyber, their cloud, their voice and their managed services. So that product is typically a $500 to $1,000 product. The cyber security part can be anywhere from $2,000 to $50,000. Cloud is really where the applications are in a private environment, which is in our data centers or in a public data center, such as an Azure or a Google. We offer the mobiles product through Telstra. Voice, we have our own voice platform, so we can resell a third-party product and manage services. So when a business today, with labour shortages coming through and skill sets, needs a range of all of these services, we can wrap that into one service level agreement. And that typically is anywhere from $2,000 up to $100,000 a month for providing that small business. It could be $1,000 a month up to a corporate, and it could be $50,000 to $100,000 a month in terms of allowing all those systems and features to actually operate on a daily basis. Critical in an environment which is seeing many workers in white collar, in hospitals, need to work remotely. The markets that we play in, we've got around 10,500 small to medium-sized businesses that we service. We're also a large provider to the schools or education market in Sydney and Melbourne, and I'll show you some of those brands in a minute. And we do a fair bit in corporate cyber as well. So one of our absolute growth areas. we probably have 6 to 7 months worth of work just in that particular segment. So if you're a business or a hospital or school and you need all your telco and IT needs, we provide the full gamut of all those services. That's good for the customer because the customer has certainty in their telco and IT needs in one organisation. It's good for us because it expands the contract range. It also makes the customers more sticky. If you're just a data provider, it's very easy for somebody to leave you. The workman can just come in, take your router away. But if we provide you with your cyber, your cloud, your managed service all in one, it's a very sticky service. And also the contract lengths move to around the 3 to 5 month mark as well across all those services. In terms of our financial results, look, pretty dramatic increase both organically and in terms of our acquisition. So revenue for from FY20 grew from $35 million, just shy of $105 million. On a run rate basis, that was closer to probably 140 mil. Is that there was a couple of acquisitions that didn't have the full year. Underlying EBIT, so I'm a little bit conservative, and I do like to run organisations that actually deliver EBIT and profit. So nothing to hide here. EBITDA on the underlying went from 3.8 mil to 11.5. Underlying net profit to 4.5 mil, and statutory net profit, which is really the old measure, the more traditional measure, at around $1.4 million. We could have done more, but we're investing in the business, and I'll show you how we're doing it for growth as well. And I'll obviously just remind everybody that we will do another quarterly next week, just to give an update on some of these numbers for the September quarter. In terms of who we service, look, there's a number of verticals that we play in. We play in the finance sector, on the cyber side, entertainment, everything from network technology to cyber to data. We do a lot of government work, so really sticky quality customers that we've got as well. Fair bit in healthcare, which is a growing area for us. For those in Melbourne or Sydney, we do a lot of the private schools. So the laptops, the Microsoft products, all of those that sit in some of your children's bags, we do all of those, and then we provide a lot of the managed services for schools as well. So really diverse base, and that's really helped us through when the SMB sector was a little bit off in this quarter, given the Sydney-Melbourne close down. We still had really strong demand coming through all the verticals. So diversity in product and also diversity in markets as well, which makes the portfolio perform relatively consistently, and it also has growth. In terms of where we've come from and what we've done, we realised very early in 2018 that just being an internet service provider had risk in it. And predominantly that was for two reasons. First of all, you had enormous subsidy coming through the federal government into the NBN program. So therefore the government was effectively discounting or subsidising that program, which meant that multiple providers then discounted the price for internet or data for businesses going through. So if you're selling a commodity, the last thing you want to do is have price deflation. So we have transformed the business from being just an internet provider to all of that product range. It might look like we've done a lot of acquisitions, and I'm not saying we haven't, but all of these provided us with two things. So we probably looked at over 100 acquisitions and ended up doing 13. In particular, all of these gave us the product sets that you saw earlier. So they gave us two things. They gave us cloud, they gave us voice products, they gave us managed services products, really to be able to have that modern offering for businesses. And the final one that we did only in April was NextGen, and that was giving the scale in the SMB market. So that's a really good business. It did around 7.2 million EBITDA through 2020, but more importantly, it gave us 120 extra salespeople to sell the product. So you think about the strategy, we've built the capability, and then we went for distribution and sales distribution. In terms of how we see the market, it's a market that continues to consolidate. We'll be part of that. We already are in terms of consolidating some of the smaller groups in it. But ultimately, we also believe that there's structural change occurring in the sense that this industry, in terms of IT and telco coming together, isn't going away. We're seeing structural changing occurring in schools with students needed to work remotely as well. We're seeing structural change in white-collar industries where in the morning they may need to be on a Zoom call from the office, or they may want to do it from their beach house. And then the cloud applications need to run in multiple locations. So where we're winning 50% of our business because of incumbents or poor service from a Telstra and Optus. But this is the most salient point and really critical for everybody to take away. 50% of our new business is because of structural change, because an organisation is changing the way they work, which is pretty exciting in terms of you've seen the growth rates and now you're experiencing structural change occurring in the way that we win businesses. So our transition to being a B2B provider is pretty dramatic. We've told the market recently, and we're working through the divestment. We do have a consumer business, which is small in the scheme of things, but we've had a pretty dramatic change in the last 2 years from probably a hybrid provider of internet services to a B2B provider. So why? As I said, larger contracts, longer contracts, greater revenue certainty, and more services. So we're probably 10, 15 minutes into the first quarter of the opportunity. I still think this is a 3 to 5 year opportunity in terms of structural change and the maturity of the Spirit business. So if you had to explain simplistically what our business is trying to do, if you've got an internet product with us, we want to sell you the data, the cloud. If you've got 2 or 3 products, we want to sell you cyber. So therefore the contract length increases, the stickiness increases, and also we wrap the service levels around you. So pretty dramatic change in our business mix and the economics. And that's why we've begun to become profitable, even while investing fundamentally in brand integration and our systems as well, which I'll talk to. B2B in terms of our deal structures. So these are some of the larger deals. So typically what you see in the larger deals, so we've just completed one for a number of health providers. The implementation of the professional services typically takes 2 to 3 months. For SMBs, this is very different. For SMBs, it's typically off the shelf. So the professional services component is typically, say, the 30 to 40% gross margin. But once you've implemented that, you move to a monthly recurring revenue where you manage the entire solution for those businesses. So think of a healthcare group that's got 80 radiology clinics that we've just completed. So in there, that's a $50,000 a month contract, but up front it had $200,000 of professional services. That's then locked in for 3 to 5 years. So that's we provide them with the telco, we provide them with the data, and we're also in discussions of partnering with all their Microsoft services as well. In terms of revenue, it's not kind of all linear because of the different markets we play in. So just to give those a view, we're trying to educate the market a little bit more around how our revenue mix. So we've got the really 2 fundamentals or 3 fundamentals. We've got the impact of the SME sector where we sell really, really quickly. We typically sell in 45-day lots. Mid-market takes 90, 120. And also typically our Q4 that we did last year, and also our Q3 because of, our Q2. So our Q4 and our Q2 is our largest because we get all the schools programs coming through Q2, which is that November, December period as well. So really important to look at this business over a 6 to 12 month period as opposed to looking at predominantly linear on a quarterly basis. So for those who look at our business in terms of the number of acquisitions that we've done, I really want to be clear that we're not only just acquiring these businesses, we're integrating them very effectively and very aggressively because we want to have a clean back office in terms of our gross margin. So only yesterday we had our first senior role as head of procurement begin. We've decommissioned around 42 systems. We've integrated into that standard operating environment that you see in front of you 10 of the 13 companies. So we're actively integrating to allow us to have efficiency and gross margins increase as well, but also the customer experience improves. So therefore, when we do sell the customer 3 to 4 products, they're simply not talking to multiple people across different systems. They're all in one CRM. They're all in one ticketing system. They're all in one ERP, so our finance system. So we closed, just to give you perspective, we closed September 2 days ago. So with all these acquisitions, even our accounting systems, which are now fully integrated, we can see our P&Ls within a few days of the close of the month. The other part that's really critical for us is building a position in the marketplace, and that's brand. So these are just some examples that we did earlier in the year across Sydney and Melbourne. We're also very active at airports, and we launched the Do It With Spirit. So do IT with Spirit or Do It With Spirit, depending how you've read it. And it shows you the position that we have in the marketplace. So more of this to come. But you can see we're not just acquiring, we're not just growing organically through acquisition. we're building a really critical brand and position in the marketplace to allow businesses to come to us for all those services. So 18 months ago, you've got cyber there, internet, communications, cloud. We only had one, and that was internet. Today, we can provide all of those, and that's what businesses want these days. With skill shortages coming through and all the complexity of the different IT and telco, businesses want a one-stop shop, and we're providing that. There's very few companies who can provide an enterprise-grade cyber and then internet connection all in one. It just simply doesn't exist. That's one in Victoria. If you're from Melbourne, just on the Monash. This is one in Sydney Airport, and yes, this was done pre-lockdown. So we had a lot of people have a look at these before the lockdowns occurred. This is one pre-lockdown as well in George Street overpass as well. So a very strong branding and brand recognition. This campaign actually doubled our leads through April and May before the lockdowns occurred. So a summary and a bit of a wrap. FY 2021, we're up 200%, 100, just under 105 mil. Run rating at 135 to 140. We continue to be boring. We like to run a profitable business. So we're very proud of being conservative. We're building a brand nationally. We've acquired multiple providers. We're in a growth market. We're in a market that's got structural change. But also we're integrating for the future. So making sure our customers get the right experience and we can increase our gross margin as a business. Mark, that's, I think, a wrap from me in terms of spirit, and I look forward to taking any questions and going from there.
Okay, I'm going to kick it off while we wait for one or two to come in from the audience. In terms of cost synergies, and you mentioned that new head of procurement, maybe just expand on where you think that can come from. You talk about, systems that you're getting rid of or integrating across the board, but are you at a point now, you can look at scale and volume benefits on like things like backhaul and, just general using, I guess, the size of Spirit now to negotiate better deals, like right across the company from, office expenses to, general everyday hardware purchases?
Yeah, absolutely. So first of all, I'd say we're not running BHP, so the cost base is not, you can take trillions of millions out, but you can certainly take a couple of million out. So I'll give you some real examples. The cost synergies are important, but the growth is more important. So we're going to get more upside on growth. But on cost synergies, some really live examples. Only yesterday, we negotiated a bonus back of $600,000 from a backhaul provider. It was only about 250, 300 when we consolidated all of it. So that gives you 300 straight to the bottom line because of the scale. And that was because of putting the Spirit and next gen portfolios together. So that was, a 300 net up in terms of the Microsoft licenses. So by putting all of our Microsoft licensing together, we now buy our Microsoft license at tier 1 status. So if you know Ripe, they've got taken over only recently. We now buy at the same prices as a tier 1 provider. So we're already consolidating in terms of our buying power, but also it's not just buying power, Mark, it also is influence in terms of product strategy and those things. So we, on one product for NBN, we already have about 5 to 10% market share on one product for NBN. Based on their EE product. So we not only have cost synergies, but we've got influence in terms of product strategy, which is vital as well.
Couple of questions have come in now. Any idea on the timing on the divestment of the consumer business?
It's close. What's happened is we've had interest on that business and other assets. So we're just assessing both deal structure and multiple deal structures. So it's close, but we look, I'd say it's over the next 2 or 3 weeks. But it depends on how we look at it, because we've had offers that on multiple assets that we may deem non-core. So 2 or 3 weeks in my view.
Okay. And then you've had a lot of acquisitions over the last 3 years. Could you please talk a little about staff retention of the principals or kind of key technology, I guess, resources within those businesses post-acquisition?
Yeah, really good question. So first of all, maybe I'll just touch upon culture, and our latest culture and engagement scores we completed. I don't think this is market sensitive. We had our numbers, so we had a 73% staff engagement score across the business, which is one of the highest I've ever seen in a COVID environment. So apart from the founders that I'll talk to, the essence of the question, we also had 73% engaged, and 83% of our company, and that's when they tick the agree or strongly agree box, believe that Spirit will be successful, which is, to be honest, it surprised me. I'm grateful and humbled, but it actually surprised me. So we're doing the right thing by our people, which is so critical in a moment where there is labour and skill shortages. So that's important. To the essence of the question around founders, we've had one founder retire and one leave, and the executive team is made up of half the founders who have got enormous shareholdings in the business, but we've had really no people leave us. And in fact, we've got a number of earnouts that have been completed that was on market recently, and all of those executives actually staying with the business. So really proud of that.
Got a question here. Can you provide an indication of how the business is trading for the first 3.5 months of 2022 financial year? I mean, I guess that'll be coming with the Appendix 4C.
We don't need to do a 4C, but we'll do a market update. So kind of next week. But I mean, it's difficult given the sensitivity and the timing of this presentation that we'll do a quarterly. But you know, I'm looking forward to releasing it.
Okay. Yeah, people can keep an eye out for that ASX announcement next week. The focus for acquisitions from this point onwards, is it more buying functionality, or is it more giving yourself scale in either, you know, verticals like healthcare or the SMB market or the government market?
Probably this side of Christmas, more concentrating on the divestments to the questions earlier. We've got to get, we're trying to get really good deal structures for capital coming back. So my answer is our strategy for really completing H2 is getting the divestments back rather than the acquisitions. If we do that, then that gives us an enormous level of capital to reinvest in organic growth and acquisition. So until we finish those, it's very difficult to answer because I'm not sure how much capital I'll have to play with. So I can't, it's unlikely, I think you never say never, but unlikely that we'd see acquisitions in this half. We'd probably be back on the acquisition trail once the divestments are completed through H2, because we'll know how much capital returns to the business.
And then another one from me, Sol. What do you think the ability to sell additional products is to, you know, the current customer base of, you know, where somebody is taking, you know, maybe private cloud with, I don't know, just like basic internet, but you could potentially then, you know, get them into mobile or get them into cybersecurity. You know, what do you think is the potential for upselling of additional products into the current customer base?
Yeah, look, I think it's probably the cross sells up to 25 to 30% of the portfolio. Right now, we're sitting at only a couple of percent, because remembering these businesses have only been brought together recently, and then we've obviously then had a quarter of markets being locked down. So we've held back some of those campaigns. It's very difficult to cross-sell when a business isn't necessarily open. But I think we can probably have 2 to 3 product portfolio penetration between 25 and 30%, but it'll take 12, 18 months to do that. But it'll mean the portfolio is sticky, and then the gross margins increase as well. So our target's around 25 to 30%, take more between 2 to 3 products across the portfolio.
And then, is there a vertical? You know, you mentioned you know, the schools, healthcare, financial services. Is there a vertical you'd like to try and enter in 2022 maybe, when we kind of get fully back up and running? I'm thinking, you know, a big push into mining services, or a big push into hospitality or retail.
We've got all of those. Your answer actually goes back to your previous question is, we've actually got enough customers, right? We don't need to enter new markets. What we need to do is move from them having 1 or 2 products to 2 or 3. So we're really farming the portfolio and shoring it up rather than needing new markets. So the guardrails for us really, Mark, are we will service anyone from small business up to corporate. So anywhere from 5 seats to probably 1,000, 2,000 seats. We won't touch enterprise. I don't think we'll go into enterprise for a few years. We just our competitive advantage is from small up to corporate. So no particular verticals. We're certainly seeing. If you said to me, where are we seeing more demand? We're definitely seeing enormous demand coming through the mining sector and health. So probably the 3 areas that we're seeing organic demand is mining on internet and data. We're also seeing enormous investment across healthcare, on cyber and networking, and also education. So schools needing to kind of restructure their IT, given the movement between students, between classrooms and working from home, given the COVID environment.
Okay, great. How are we doing for time? Okay, we've got if we don't have any further questions from the audience, I think so. We're just coming up on time. We might finish a minute or two early, but let's leave it there. Thank you very much for coming back and giving us an update. And as I said, the recording will be up on the Coffee Microcaps YouTube channel tomorrow morning.
Thanks, Mark, and thank you all for listening.
Okay, thanks everyone. I wish everybody a good rest of their Thursday.